Good evening, everyone. Welcome to our webinar, Portfolio Landlords, Are You Ready? So, what is happening? Well, from the 30th of September this year, the PRA will require all lenders to change the way in which buy-to-let mortgage applications are underwritten for portfolio landlords. Going forward, landlords with large portfolios will be subject to further affordability checks. Now, according to the PRA, portfolio landlords are defined as borrowers with 4 or more distinct mortgaged buy-to-let properties, either together or separately in aggregate. And what that means that is if you've got them in a limited company as well as personal, then your limited company ones will get caught up in that definition. So if you've got 4 or more mortgaged properties, whether in your personal name or a company name, you are now a portfolio landlord. It's a massive game changer for the buy-to-let market and comes hot on the heels of the change to the rent-to-interest stress tests that came in January. If you want more info on the stress test changes, then please feel free to ask questions at the end. So why are these changes happening? Well, this is all really linked to George Osborne's policy to level the playing field between landlords and first-time buyers. And portfolio landlords are seen as a higher risk, really, amongst lenders and the regulator. I disagree with that. I've always been of the belief that the more professional the landlord, the lower the risk, i.e. the more properties the landlord has, the less effect a void period has on income. And I often discuss this paradox with lenders at a senior level. As always, lending policy is driven largely by past arrears cases, and it only took a few large portfolios which went down at the credit crunch to mar the view of lenders and indeed the regulator. So the PRA wants to ensure that landlords are not overexposed, and to ensure this happens, the PRA is asking lenders to be more diligent when making lending decisions on portfolio landlords because of the complexity of their borrowing circumstances. So, they'll look at the gearing on their portfolio, what the rent cover is, whether any of the properties are underwater, i.e. sort of the rent not covering the mortgage payment. And they'll do their own valuation checks using various software applications and people like Rightmove, HomeTrack and Zoopla to check what the market's saying against the landlord's view of what his properties are worth. What does this mean for lenders? Well, from the 30th of September, lenders will need to have separate processes in place for underwriting both portfolio landlords and then non-portfolio landlords. And this will equate to much heavier workload and longer turnaround times. I'm convinced of it. This will mean lenders will need to upgrade systems, train staff, publish criteria and inform brokers and borrowers of their changes. And all of this is going to come at a cost. And we won't be surprised if we start to see rates rise or administration fees start being applied to certain products for portfolio landlords off the back of all of this. Now, I'm not saying that some lenders won't get this sorted in time, but there's little time left until the deadline, and I can't see it being the smoothest of transitions. Specialist lenders shouldn't suffer so greatly as because most of these have sort of robust underwriting processes in place anyway, but even those that do are likely to suffer from some serviceability challenges due to the uplift in business they're going to get. As the mainstream lenders start to struggle with workloads, you'll see applications being redirected from the more vanilla lenders to the specialists. So I do see the specialist lenders having some challenge on service. All this extra work may even see some of the vanilla lenders put a halt to lending to portfolio landlords. We saw last week that Platform Home Loans announced that they're only going to be lending to landlords with 3 or fewer properties. And I wouldn't be surprised if we see some more mainstream lenders follow suit. There's no set rules on how lenders need to assess portfolios, so each lender are going to have their own rules, and I guess it's up to brokers to understand each lender's processes and then advise landlords accordingly. But it is going to be tricky as all the new rules settle down. Now, after a slow start, a good number of lenders have now offered at least an initial position on their stance. To summarise, the more commercially minded lenders are essentially saying no change, as they've always underwritten cases in this way. But the more vanilla lenders, generally with the lowest pricing, are separating the two parts, i.e. streamlining processes for those with 3 or fewer mortgage properties, and then requesting a lot more information from those with more properties to meet the new standards and to keep the PRA happy. Even today, Aldermore have announced today that the documents that they'll require, including business plans, portfolio schedules, etc. So we'll be writing some blogs and articles about that over the coming days. So keep an eye out for those. And what does this mean for brokers? Well, as the channel between the lender and the borrower, borrowers will need to devote considerably more time helping landlords understand these changes, extracting from landlords the details of entire portfolios and making sure that the landlords get the right advice. The time brokers spend toing and froing, collecting and collating information will increase. For brokers with clients that have considerable portfolios, then there will obviously be a lot more work to do. As a broker ourselves, it's our duty to keep landlords educated around what is happening in the industry and to manage expectations, certainly around lenders' turnaround times, because they're likely to increase, and yeah, we all need to be aware of that. If you're a broker listening and you don't have access to the specialist lenders, then I'd advise that you align yourself with a master broker like Mortgages for Business, who can help. Brokers will also need to decide how they're going to handle portfolio landlord applications. Here at Mortgages for Business, we're looking at technical solutions, whilst others may continue to use a manual process. Some lenders will allow you to email a landlord spreadsheet and they'll manually underwrite it. There are those online lenders that will seek electronic solutions to get automatic valuation data on the portfolio, so they'll require you to upload the landlord's portfolio in a certain format, and I can see some lenders getting that right, but as I say, there could be some teething problems. What does this mean for landlords? Well, going forward, portfolio landlords will be subject to stricter affordability checks. Lenders will look to stress the background portfolios against the new rules to ensure that landlords are not overcommitted. But as I said earlier, it's unlikely that they will rely on the landlord spreadsheet for details around the valuation of the property and the rental income. They'll have their own automatic valuation models in the background that will give them the information, and then they will compare that data with what the landlord's telling them. And then if there is any major discrepancies, then they'll be asking questions on why the difference. So this means landlords will have to produce more information to support their buy-to-let mortgage application, which of course is going to draw out the entire mortgage application process. So if you're a portfolio landlord and you know you'll require buy-to-let finance in the future, we do recommend that if you can, consider bringing forward your financing plans, or at the very least, you must get prepared. To help landlords prepare, we have produced a portfolio landlords checklist of paperwork you may be asked to produce in addition to the standard documents that you're used to supplying. You might be asked for the last 2 to 3 years worth of tax returns, so make sure you have copies available. At the very least, you'll have to provide SA 302s, which are statements of your income. These are issued by HMRC and can be downloaded from your HMRC account. If you don't have an online account, you can request them by post, but please note that can take a few weeks to arrive, and I have heard on the grapevine that HMRC might be withdrawing this facility. So yeah, watch this space. The lender may ask for up to 6 months bank statements so that they can see how you spend and manage your money on a monthly basis. If you use a number of different bank accounts, i.e. to keep separate rental income from any other income you may earn, remember you'll need to provide the statements from all the accounts. As I said earlier, lenders will want to see details of your entire property portfolio so that they can understand your overall borrowing commitments and get an idea of your experience as a landlord. So in your spreadsheet, make sure that you include the full address, rental income, details of any outstanding mortgage, who the lender is, what the monthly mortgage payment is. Please make sure your portfolio spreadsheet's as robust and as detailed as possible. As well as being a landlord, some of you do have a day job or separate income from pensions or other investments. Now, lenders will take other sources of income into consideration, so make sure you have all the relevant paperwork to support and evidence the income. You may also be asked for a business plan. Aldermore today said they'll be looking for business plans, but please don't panic. This doesn't have to be a lengthy document. Rather, lenders will just need to understand your investment strategy, both now and in the future. For example, they want to know what types of property you buy, what sort of location you buy them, whether you borrow on an interest only or a capital repayment basis. They'd be interested in your exit strategy, what types of tenants that you go for. But in general, it should only be a sort of a one-page document, so don't be scared of the phrase business plan. Some lenders may also ask for a cash flow forecast. Now that would be a detailed sort of spreadsheet showing rents in, mortgage out, all the property expenses going out. I am hoping though that, you know, if they've asked for 6 months bank statements, they will be able to get a good feel of money in and out and won't therefore be asking for detailed cash flow forecasts. But if they do and you need help with that, then talk to your broker. I'm sure your broker can help you put one together if you're struggling. So whilst we're waiting for most lenders to publish their specific requirements, this checklist is a good start, but it may change, and we'll keep updating the landlords and brokers if there are any other documents that are required. However, the 30th of September is just, 23 days away, so you need to be prepared. The next steps for landlords. Some of you are very organised, but some of you will need to start getting your paperwork sorted. If you haven't reviewed your portfolio finances for a while, I suggest you do so. Alternatively, we can do it for you. Just send us your spreadsheet. We'll then analyse it, give you a clear picture of your investment finance together with recommendations on how to proceed and keep your strategy on track. Specifically, we can help if you're looking to save money, and we can look at switching to an alternative mortgage provider, or if you're looking to get money out of the portfolio and sort of release some equity for further property investment, then again, we can look at that for you. Use our portfolio checklist to get your paperwork or your client's paperwork in order. And when we send out this presentation, we'll also send you a more detailed checklist than the bullet points you've just seen. For those of you looking to refinance shortly, I'd also urge you to get your applications in now ahead of the end of September, because it is going to get a little bit sticky. As I said, I can see service delays, and as the new underwriting rules kick in, there will be some teething problems. So if you are looking to raise finance, better get your application in sooner rather than later. And finally, this is a good time now to take any questions. Has anybody got any questions? So Hadja has asked who the specialist lenders are for portfolio landlords. Hadja, most of the buy-to-let lenders out there, as I say, there's only currently Platform Home Loans have said that they won't be lending to portfolio landlords. I do expect a few more of the mainstream to maybe pull out, but at the moment, the sort of 35, 36 buy-to-let lenders out there currently active, the majority of them will lend to landlords with 4 or more mortgage properties. We're just waiting really for details of how they're going to underwrite you and what hoops you'll need to jump through. Okay, SL has asked about cash purchasing from auction and then remortgaging it afterwards. Yes, I mean your broker can help you with that. If some lenders will insist that they won't look at a remortgage until you've owned the property for 6 months, but there are an increasing number of lenders, including the likes of Keystone Property Finance, who will be happy to look at a remortgage as soon as you've bought the property. If you're increasing the value, i.e. buying it for cash, spending money refurbishing it, then we've got lenders again, including Keystone, that would look at the increased value of the property and refinance against that. Are there any lenders who will lend to multiple properties in a portfolio on an averaging basis? What I think you mean there, Martin, is whether they sort of total up the values and the rents and put their formulas on the whole portfolio. Yes, there are specialist commercial lenders, some of the challenger banks. They will look at a single loan on a portfolio of properties rather than single loan, single property. So yes, we can certainly help with that, and we've got access to lenders that would take a view on the whole portfolio. So Joe's asked whether in February, when the fixed rate runs out, whether the new criteria will apply. If it's just a product change without any extra borrowing, you should be fine. If you're raising capital and it's a fresh underwrite, then yes, the new rules would apply. But yeah, just product changing without any extra borrowing. Whilst the lender will ask for up-to-date information. And I don't know what lender you're with, but there's an outside chance that if you do have 4 or more mortgage properties, they may ask for an up-to-date portfolio spreadsheet. And if it's the Skipton may well ask, just want to check what properties you have in the background, just to check that you meet their criteria. But if you're not increasing the borrowing, then there are rules from the PRA that you would not be penalised. So don't worry if you're not raising capital. Yes, we'll be sending out, for anyone who's missed the start of the presentation, we will be sending out a copy in an email tomorrow, along with a portfolio review list. So yes, we'll get that out. Mahendra, yes, I saw your question earlier on the stamp duty. The answer that Jenny gave is actually correct. I can't see a way where you would avoid paying the extra 3% surcharge on your inquiry. I know it's not great news, but that's where we are. Joe, our mortgages are repayment over short terms. Joe, yes, each lender is going to treat that quite differently, I think. I mean, in general, lenders will look at the background portfolio and they will want to see that each property is washing its face, so that the rents are meeting the mortgage payments. They will, if there's some in the property that are unencumbered that can mitigate the situation, then they will take a view. But to answer your question, it will cause problems with some lenders, and some lenders will be fine with it. So again, it's talking to your broker, who will know which lenders will be happy with that and which won't. Mahendra can also I think Mahendra, if you've still got those other properties in the background, then it's subsequent properties. So there is a rule about if it is your main residence, and with, I think it's 18 months, you may be able to claim some of the back. But we'll get a full answer to you, Mahendra, on email by latest tomorrow. But as far as I can see here, you will still have to pay that surcharge. We've got a FAQ sheet that we'll get over to you explaining all. What is involved in the portfolio review? We do this quite a bit. Landlords send us their portfolio details of all their properties, and then it's down to what your requirements are, really. If you want us to look and say, right, whether that you can save money by switching to a different lender, it might be that you're looking to release equity, and we can look at the rent cover and let you know which lenders that would work with. All free of charge, no obligation at all. We're happy to do that. You send us your spreadsheet, and then we'll come back to you with our thoughts and maybe have a chat over the phone. So SL had several buy-to-let properties under his name before setting up a limited company. Will the lender consider these as well if applying mortgage via limited? Yes. So the 4 or more mortgage properties in aggregate is whether they're in your personal name or limited company. So if you have some in personal and some in limited company, they will be combined when looking at the PRA definition. You're welcome. Welcome. Look, Joe Martin's question: all mortgages are all repayment. Yes, I had answered that, but let's have a look. I mean, it depends on what all lenders are going to treat it differently. As I said, we're waiting for rules on how they're going to treat and assess portfolios. But some lenders, if they do see some properties that are not washing their face in the portfolio, i.e. the rent is not covering the mortgage, then I know some lenders will just decline any application that they see if you've got a portfolio in the background with some properties not washing their faces. Other lenders will take a view, especially if you've got unencumbered properties in the portfolio, that will mitigate the situation. So again, it depends on the lender. Are SPVs or limited companies better for growing property portfolios? That's a tax advice question, really, Lionel. And we do say that we're mortgage experts and not tax experts, and we do insist that our landlords take tax advice, certainly on new purchases. We are seeing almost 80% of our purchases now being made in a limited company capacity, so that may give you some idea. And certainly if you're a high rate taxpayer, it probably makes sense for the next purchase to be in a limited company. There are more options if it's a limited company set up specifically to invest in property. If you have a trading company that does other things other than invest in property, again, we can help. But please talk to your accountant on what the best route is for you for your next purchase. Interesting question. Will the lender review any holiday let properties in a portfolio? Yes, particularly if they're mortgaged. They might come back with some questions. Certainly if in your spreadsheet you have holiday let rental income and their checks come back with their standard sort of AST income and there's a big discrepancy, they'll ask questions on why. But yes, if it's an investment property and it's a holiday let rather than a buy to let, they will look at that. The 4 properties, the actual PRA definition is 4 mortgaged properties. So, if you've got 5 unencumbered buy-to-let properties, then you don't fit the criteria for a portfolio landlord. However, and it's a big caveat, there are a couple of lenders that may decide that they will treat you as a portfolio landlord if you've got 4 or more properties, regardless of if they're mortgaged. But the actual PRA definition is if you've got 4 or more mortgaged properties. So to answer, if you consolidated 5 mortgages into less than 3, would it make life easier? Probably yes. There will be lenders out there that won't treat you as a portfolio landlord. But bear in mind, if your next application makes you have 4 mortgage properties, then you will then be underwritten as a portfolio landlord if that new application makes you or creates the 4th mortgaged property. Anybody needing any answers typed, we'll do that in the follow-up email. If that's okay, Shira. If you're back online now, then the answer on Joe's question is that the definition is 4 or more mortgaged properties. So most lenders will be fine if you've got less than 4 mortgages. But remember that if the subject application creates the 4th mortgage property, then you will be treated as a portfolio landlord. Mahendra, just reading your question about remortgaging if you don't have jobs. Again, each lender's different. It's down to your broker to find you the right lender that fits your personal circumstances. So there are lenders out there that would be happy basing the application on the income you receive from the properties and won't insist that you have a separate job in the background. So your broker will assess your current situation and then match you with the right lender and product. But yeah, there are mortgages and products out there if you've just got your income from the rents and no other employment. So a couple more minutes for any more questions before I hand back over to Amy. Okay, it doesn't look as though there's any more questions. So thank you, everyone. I hope you found today's webinar informative. I'll now hand you back over to Amy, who will quickly explain when you'll receive a follow-up email and a copy of the presentation.
Hi everyone, so I hope we managed to answer all of your questions today. If you do come up with any more, then please feel free to email them through to us. There will be contact details in the follow-up email tomorrow, and most of you will have had an email from me already, so you can just send them directly through to me. Now, as Steve mentioned, we will be sending out a copy of the presentation slides within a follow-up email. This will be with you tomorrow, and it will also include a link to our property portfolio review form, in case you don't already have your own, and a link to our portfolio landlords checklist. I will have the webinar, the recorded version, on YouTube for you to watch back early next week. And so thank you again for your time, and I hope you have a great evening.